Hey traders, welcome back to Financial Market Insights for Traders. I'm your host, Sophia, and today we're unpacking one of the most dangerous threats to your trading portfolio: emotional trading. It's sneaky, it's destructive, and if you don't learn how to spot it, it will drain your capital. You can have the best indicators, the perfect risk reward ratio, the most dialed in setup, and still lose money if your trades are being driven by fear, greed, anxiety, or FOMO. So, in this episode, I'm breaking down what emotional trading really looks like, why it's so damaging to your long term success, how to spot it in yourself, and how to take control and trade with logic, not impulse. Let's get into it. What is emotional trading? Emotional trading happens when your decisions are driven by feelings instead of your trading strategy. Here's what it looks like in the real world. You buy because the stock is spiking and you're scared to miss out. You sell in a panic when a few red candles show up, even if the fundamentals haven't changed. You increase your position size after a big win because you're feeling invincible. You hold on to a losing trade, not because of logic, but because of hope or ego. Sound familiar? That's emotion driven trading. And over time, it creates a pattern of buying high, selling low, and chasing market noise. It's a one way ticket to portfolio pain. Why our psychology works against us in trading? Here's the truth: our brains were wired for survival, not for trading. The same instincts that kept us safe from danger in the wild, they sabotage us in the financial markets. Let's break it down. One, fear. Fear leads to panic selling, even when it's irrational. You see red candles and instantly think, get out now. It overrides logic. Two, greed. Greed keeps you in trades longer than you should be. You've hit your profit target, but you want more. Then the market turns and your gains disappear. Three, FOMO, fear of missing out. FOMO pushes you to chase hype. You hear the buzz, see everyone else piling in, and think, if I don't get in now, I'll miss it. That's when you buy at the top. Four, hope and regret. Hope keeps you stuck in losing trades. Regret makes you revenge trade to win back losses. Neither emotion leads to smart decisions. The financial risks are real. This isn't just a mindset issue, it's a capital issue. Emotional trading causes measurable financial damage. 1. Poor entry and exit timing. You jump in too late. You exit too early. The result? Missed gains, realized losses. 2. Overtrading and higher costs. Emotional trading leads to too many trades. And with every trade comes fees, slippage, and risk exposure. 3. Broken risk management. You ignore your stop loss. You double down on a loser. You increase your lot size because you feel lucky. That's how portfolios blow up. 4. Inconsistency. If your trades aren't based on a system, you can't track or improve. Random trades equals random results. 5. Mental burnout. That constant cycle of anxiety and adrenaline, it's exhausting. And burnout traders make bad decisions. Real world examples of emotional trading. Let's look at a few cases you might remember. GameStop AMC, the FOMO trap. In early 2021, thousands of retail traders jumped into GameStop and AMC after seeing the hype online. Some got lucky. Many bought at the peak and were left with major losses when the bubble burst. Bitcoin crashes, panic selling in action. Every time Bitcoin corrects, like in 2018, 2021, or 2022, you'll see a wave of panic selling. People who bought the top sell at the bottom, locking in 50 to 70% losses. The dot-com bubble, a greed-driven collapse. In the late 90s, tech stocks with zero earnings soared on hype. Greed blinded investors. When reality hit, portfolios were wiped out. How to know if you are trading emotionally? Self-awareness is the first step to fixing the problem. Ask yourself, do I feel anxious or excited before I place a trade? Do I second guess myself constantly? Am I switching strategies based on social media or market noise? Do I trade more after a loss to make it back? Do I feel relief or fear, not confidence, when I close a trade? If the answer is yes, you've got some emotional interference. How to break the cycle? Let's talk solutions. Here's how to build discipline and protect your portfolio from your own emotions. 1. Create and follow a trading plan. Define your entries, exits, stop losses, and position sizes. Follow the plan, don't trade off vibes. 2. Practice risk management every time. Risk 1 to 2% per trade. That's it. This keeps you in the game and removes pressure. 3. Use automation tools. Set stop loss and take profit levels before you open the trade. Automation helps prevent panic decisions. 4. Keep a trading journal. Log every trade. What you did, why you did it, and how you felt. This will show you the patterns that need to change. 5. Limit the noise. Turn off the Twitter feed. Step back from hype. Stick to your system, not the crowd. 6. Set realistic goals. Are you trading to learn? To build capital? To replace your income? Know your goal and stay focused on it. When you need clarity, go to the source. If you're serious about trading without emotional chaos, you need access to real market insights. Not hype, not noise, not signal sellers. You need data, education, and strategy. That's exactly what you'll find at crystalballmarkets.com. Their blog is packed with expert analysis, trade ideas backed by logic, psychology tips to build your discipline, and practical education for every level of trader. Visit crystalballmarkets.com today and subscribe to their blog. It's free, it's smart, and it's designed to help you trade with clarity and confidence. Final thoughts: trade like a professional. Look, emotional trading isn't just a phase, it's a portfolio killer. The traders who succeed long term are the ones who stay calm, follow systems, and respect risk. You can't control the market, but you can control yourself. Detach from the outcome. Focus on execution. Build habits that keep your head clear. Because in trading, logic beats emotion every time. That's it for this episode of Financial Market Insights for Traders. I'm Sophia. Thanks for listening. If you got value from this episode, hit subscribe, share it with a fellow trader, and leave us a review. Until next time, trade smart, stay disciplined, and keep your emotions out of your execution.